Assalamualaikum and hello everyone. We are from Group 7. We will be presenting the case for Worldcom accounting scandal. Firstly, I would like to introduce our group members, which consists of 4 peoples, which are Faraziatul Suhada, Nur Fazurin, Nur Nabila Huda, and me myself, Nurul Hamizah.
Assalamualaikum, my name is Farah and I will explaining the fact of cases for Worldcom accounting scandal. First of all, Worldcom is a company that offered telecommunication service during 1994 until 1999. However, the business of Worldcom started declining during 1999. On the first quarter of this year, a future transaction without evidence is identified. This is because Worldcom want to compete and survive in an intense competition. The same thing happens in the second quarter and the third quarter of 1999. However, this fictitious transaction then led to a fraud because they tried to cover misclassification of expense, resulting into an ambulance entry. The peak of the cases is during 2002, where the fraud is discovered by Cynthia Cooper, the internal auditor of Worldcom, and then Worldcom then filing for bankruptcy. On 27 June 2002, a civil fraud charge is filed against Worldcom by SEC. The executive then sentenced to jail time for CEO Bernie Ebbers for 25 years, CFO Scott Sullivan for 5 years, and the controller David Meggers for 1 year. We identify Bernie Ebbers, the CEO of Worldcom, as the perpetrator for this case. He was to focus on new acquisition and did not pay attention toward integrating prior acquisition. No effort has been made by him in order to solve the long-term offense that are committed by the member of Worldcom throughout the year. The other actors in the scandals are Scott Sullivan, the Chief Financial Officer of Worldcom. He told Cynthia Cooper to delay the audit for the capital expenditure of the company and dismiss her concern on the unbalanced figure in the company journal entries. Next, Melvin Dick, the Arthur Anderson partner who is in charge of the external audit of Worldcom financial statement. He also the one who ignored the concern of Cynthia Cooper regarding the unbalanced figure in the company journal entries. Next, David Meggers. He is the controller who is responsible for the journal entry, who is not cooperating with internal audit during the audit investigation done by Cynthia. And lastly, Cynthia Cooper, the one who discovered the fraud acts done by the member of management in Worldcom. She is the internal auditor of Worldcom.
Hello, my name is Nur Fazurin. I will proceed the presentation video by explaining the internal audit issue in Worldcom accounting scandal. As we know, there are 3 areas that are covered in internal audit, which are governance, risk management, and control. So we will address the issue based on the 3 areas. The first area is governance. Governance is the process and structures used by the board to inform, direct, manage, and monitor the activities of the organization to achieve its objectives. The first issue that can be seen in corporate governance of Worldcom is the employment of a CEO, Bernard Ebbers, which has little knowledge and no background in the phone technology market. This causes him to only use his knowledge and skill to raise funds and use them on the acquisitions. However, Ebbers failed to consolidate the companies he bought into an efficient business and was deadlocked, looking for a way to increase the share value of Worldcom. The second issue is board members easily approve almost all of the suggestions put forward by the CEO. This is because Ebbers showered them with benefits. Half of directors of Worldcom are associated with Ebbers, and they have a substantial personal interest in the company, as they was tied to the stock and caused them to allow management to do whatever they wanted to maintain the stock price. The third issue is the close relationship between the external auditor, Arthur Anderson and the company. This caused management to take advantage of the issue, then occurred within the company and convinced its auditors to agree to the fraud it was committing. This close relationship has given the impression to management that their auditors will not report their fraud.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Nabila Huda and I'm going to explain for the next part. The next component in internal audit is risk management issue. The risk management is a process to assess risk and action as a model of work to the boards of directors and management. In the case of Worldcom, there is no proper risk management system implemented in the organization due to lack of internal control. The internal risk factor has been detected due to complete control and access to the business activities by the CEO Bernard Ebers, CFO Scott Sullivan and Controller David Mayers, which provide opportunity for them to commit fraud. The internal auditor should be able to do risk management on the issue and provide adequate advice and control measures to the management or board of directors. Next, control issue is also one of the component of internal audit, and control issue in Worldcom mostly due to improper implementation of risk management and control. To assess control in Worldcom, based on the COSO framework, we can refer to the 4 steps as stated in the slide. First, control environment. The first step is to manage the control issue, is to make sure that there is a controlled environment in the organization. In Worldcom, lack of control environment in the business due to high pressure to maintain the performance and no proper internal control measures such as a whistleblowing system to keep eyes on the business influence the act of fraud that happened in the Worldcom. Second is the risk assessment. Based on the control environment earlier, we need to do a risk assessment whether the situation in control or out of control might bring risk to the company. In the case of Worldcom, failure to do risk assessment regularly to oversee business operation, including accounting transaction and decision to acquire other business, which leads to the failure to detect fraud risk and evaluate the level of risk and the impact to Worldcom.
Another component of the COSO framework is the control activities. Control activities are the action established through policies and procedures to ensure directive of the management to mitigate risk in order to achieve objective. In Worldcom, any policies and procedures such as essential control procedures are not implemented. This increases the risk of fraud as it becomes a great opportunity for management to commit fraud. The last component of the COSO framework is monitoring activities. It is ongoing assessment to ensure that all 5 components of internal control, including the control that affect the principle within each component, are present and functioning. The internal monitoring process of Worldcom has been improperly structured, and the management is unable to inform the top management of the correct business direction and guidance.
Hi, I'm Nurul Hamza and will be presenting regarding the recommendation for the Worldcom accounting scandal. The first recommendation is they should change their internal environmental strategies. By having a proper strategy, the company is able to sustain and establish their position in the industry. For example, Worldcom could change their internal strategy by hiring a CEO that has qualifications and experience related to industry. Unlike Worldcom, when they hired Bernard Ebers, who has less experience regarding the telecommunication industry. Secondly, they could change their company culture relating to the management style of top management. For instance, they could establish an open door policy to allow employees to speak openly regarding their opinion to top management. Lastly, they could apply technology feasibility to ensure a continuous assurance for the company's financials. For instance, by using current technologies such as fraud.net, where they help businesses in identifying suspicious transactions using artificial intelligence.